You've seen it, right? One day the market is down, the next it's soaring. For 3 days this past October, from the 13th to the 15th, the market basically gave everyone whiplash. Now, it might look like total chaos, but it wasn't. So today, we're going to decode that chaos and find the hidden logic behind the market's contradictory moves. I get it. It can feel completely random. The market tanks on Monday, only to soar on Tuesday. But here's the thing. It's not. There's actually this powerful logic at play, a battle happening just under the surface. In this explainer, we're going to show you exactly what's driving those numbers. So let's just lay out the pattern we're trying to figure out here, okay? So Monday, October 13th, the market underperforms. Then Tuesday, a complete 180, it outperforms. And then by Wednesday morning, futures, the bets on where the market's headed, were pointing to an even stronger open. So down, then up again. What was going on? All right, the key to really getting this seesaw action is to picture a constant tug-of-war. On one side of the rope, you've got all the scary headlines, right? The geopolitical drama. And on the other side, you have the powerful pull of the actual underlying economic fundamentals. Every single day, these two forces are battling for control of the market's direction. So this really lays out the two opposing teams for us. On the left, you've got what we're calling the geopolitical headwinds. That constant drumbeat of US-China trade threats, warnings about a global slowdown, all that stuff. But pulling just as hard in the other direction is the economic engine. Think a supportive Federal Reserve, really strong company earnings, and all this hope for easier monetary policy. These are the two stories pulling the market in opposite directions. Okay, let's dig into that first force a little deeper, the geopolitical headwinds. This is the side of the rope that's really fueled by fear and, maybe more than anything, just sheer unpredictability. And wow, here is a perfect example of that unpredictability in action. So heading into this 3-day stretch, President Trump's comments on China actually sounded pretty good, kind of easing fears. But then boom, just a couple of days later, on Tuesday, the talk heats right back up with new tariff threats. For any investor, that kind of whiplash, it just creates a ton of uncertainty. And of course, the media just ate this up. This was the kind of headline you were seeing everywhere on October 15th. The story being pushed to investors was super clear. Hey, forget everything else. The trade war is the biggest risk you need to be watching. And this wasn't just talk. It had a real, tangible consequences. The IMF, the International Monetary Fund, actually cut its global growth forecast down to 3.2%. And they said exactly why. Persistent trade uncertainty. So suddenly, that fear, it was showing up in the hard numbers from the world's top economic institutions. All right, now let's talk about the other side of the rope. Because while all that headline drama was going on, this really powerful economic engine was just humming along in the background, pulling the market in the total opposite direction. And get this, even the head of the U.S. Federal Reserve, Jerome Powell, used our exact metaphor. He actually described the economy as being in a tug-of-war. That just confirms it, right? This tension wasn't just some theory. It was being felt at the absolute highest levels of policymaking. So if you looked away from the political headlines for a second, you'd see that actual companies were posting some really strong results. On that Wednesday, October 15th, you had these financial giants, Bank of America, Morgan Stanley. Both of them reported earnings that blew past expectations. And that kind of hard data told investors, hey, the real economy, it's humming along just fine. And here's maybe the biggest advantage for the economic engine. The market was pricing in a, get this, 96% chance that the Fed would cut interest rates. So this belief acted like this huge safety net for investors. It gives them the confidence that, hey, if those geopolitical headwinds get too strong, the Fed is ready to step in and prop things up. Okay, so we've got these two powerful forces locked in this daily struggle, right? You've got the scary headlines pulling down and the solid fundamentals pulling up. So let's go back to our 3-day timeline and actually see who won the tug-of-war on each of those days. On Monday, October 13th, the winner was crystal clear. Just look at this. All the major indexes finished way in the red, performing way worse than their 10-year average. Round one went decisively to the geopolitical headwinds. Yep, fear won the day. But then on Tuesday, the 14th, the rope starts to move back. Even with those new tariff threats, the market rallied. Every single major index didn't just finish positive, it outperformed its seasonal average. The economic engine was fighting back and fighting back hard. And check this out. The tech-heavy NASDAQ 100, it didn't just outperform, it delivered double its historical average return for that day. Now, that is a really powerful signal that investors were starting to shift their focus away from the political fears and toward the actual strength of the businesses. And that positive momentum, it just snowballed right into Wednesday morning. So before the market even opened on the 15th, those awesome bank earnings we talked about sent U.S. stock futures soaring. You could feel it. The tide had clearly turned, and it was in favor of the economic engine. This momentum was so strong, it actually changed the entire story in the financial press. All of a sudden, this new narrative started to pop up. Earnings over everything. The whole consensus view shifted. The thinking became, okay, for now, investors are choosing to focus on real, positive company results instead of these abstract political threats. Okay, so we've seen how this whole battle played out. But what can we actually learn from it? What does this crazy 3-day tug-of-war tell us about where the market might be heading? So, what are the key things to keep an eye on? Well, first off, for now, fundamentals seem to have the upper hand over the headlines. Second, that belief in a supportive Fed, that's providing a really strong safety net for the market. Third, and this is a big one, those geopolitical headwinds have not gone away. That trade talk is still the biggest wildcard out there. And finally, you gotta keep an eye on technical stuff. For instance, the upcoming options expiry, that's a day when tons of contracts get settled. It's probably gonna add even more fuel to the fire. Bottom line, this tug-of-war is far from over. And this really leaves us with a final thought. In a market that's just defined by this constant collision of fear and data, which side do you follow? What these 3 days really show us is that the winner can change from one day to the very next. So maybe the most important skill isn't trying to pick a side, but just understanding that the battle itself, that tug-of-war, is what's really driving everything.